Welcome to Trading Lounge and the US indices for January the 23rd. So starting with the SP500 here, we can count 5 waves to the upside in terms of 1 and 2 and 3 and 4 here, and then 1 and 2 and 3 and 4 and 5. We'll look at that closely in a moment, and then we can look at an A and a B and a C here. It can pull back into this area here, the medium level 2500 at the 50 and the 60% retracement level. There, so that's what we're looking at the moment. Let's go into the hourly chart here. So let's just go back a little bit. So we can look from wave 2 here as 1 and 2 and 3 and 4 and 5 here for the third and fourth here. Bit of a small fourth wave, I have to say, and then 1 and 2 and 3 and 4 and 5 into this area here. We never got to our 61.8% retracement level here. With this here at the moment, let's talk a bit of strategy here. So first of all, on the long side, we're in a bullish trend to the upside. So just in case we are wrong here, so we could take this top here. We could also bring it down to this one here. The bottom line here is that let's just talk about the trading levels a little bit here. So we know that 2500 is a medium level, and the next level degree down is the 2800 here, and which is a minor level. And then we move down, basically go halfway between the 5 and the 8, the Fibonacci numbers 1, 2, 3, 5 and 8, and then we halve this 5 and 8 here down to 2650. So I've talked about this number before a bit, and let's just talk about it a bit further here as well. As I always say, the 2700 is a nice big whole number, and so is the 26, and they are important, but I just find in terms of trading and pattern recognition that the 2650 here becomes more important, because it's where the balance point, if there's going to be a correction in this area here, then this number here becomes the balance point for it. And that's what we can see here at the moment. We can see that the market's moved up through it, and then it's come back down through it. It hasn't actually rejected it yet, so it means that the market, that's the number that we're actually working with. With that in mind, if that becomes this move down through here, if I take this high here, and let's just imagine that the market can move down to the 26 area here and bounce off the 26, well, that would make this the 50-60% retracement level here, and then the market can move down from that point. If we get 5 waves down here, then we can look to short in this particular area here. So I'll just put that in green there, so we can short in that space. If we get a better ABC pattern to the upside here, like something that's a little bit more sort of refined like that, then we can also copy that. We can put that here. We can also just cut this straight through here if that's going to be the case. It doesn't always give us that nice pattern there, so we'll just have to see how that performs, but that low and that low there can always give us a reasonable area through here. We can also work the levels down here as well. I won't go into those too much just yet, but that's sort of the general picture. So if we're wrong, we need to be long on support of 2650, and if this is going to be the A wave, the B wave and the C wave here, then first of all we'll want to see 5 waves here, and secondly then we can look to short the ABC down through here. It'll also be interesting as well, because with corrections we can normally see that if we have a market moves up, then it's normally the A wave that's the sharpest, and then we have the B wave in 3, and the C wave is on a bit more of an angle. So that's what we'll be looking for. If we see this market move down sharply from here, then we'll have to consider that being a stronger move down as the third wave coming down. So let's just bear that in mind too as we go. And support on this level here is quite simple in terms of my style. Is with the arrival here, there'll be the reaction, the first high above the level, then an A and a B and a C pattern here, and then we use that reference high here to move in. We can get a better positioning of that, but that's just general picture there. So that's where we are with this really. So it comes down to now what this particular structure is here. One of the things here, let's just go to the tick chart here. Now from this high here, we've got this is the actual high here, but on the actual physical market, it's not the high here. This is the high here. So a little bit of a dilemma here in this instance. So, but I'm going to take it off the cash market and call this wave 1 and wave 2. It may be wrong, but I like to sort of include the cash market. The cash market's not leveraged, the futures market, and then you've got this is a CFD platform here. You don't have CFDs in the US. The option exchange put their foot down on those, but they're here for the UK and Germany, well, most of Europe and most of Asia as well. Yeah, look, I'm going to take this as wave 1 for the time being and wave 2. Now, I could be wrong. We might need to reassess that. But if that's the case, then it looks like we're down at wave 3 here. And this would be wave 4 here, which would be roughly right, I'd imagine. So I'm going to take that high rather than the other high and use that here. So near enough is good enough, as they say in Australia. So that's okay for a wave 4, but we'll need to see the market move down from these highs here. It can make another high, but generally speaking, we need to see that move down from there. It does look corrective here, as we've got an A and a B and a C here for the A wave and back for the B and up for the C wave here. Yes, of course, it can be 1 and 2 and then 1 and 2 and then 1 and 2 here, building to the upside here. But look, this little leg doesn't really concern me too much at this stage, but yeah, anyway, a move down into this space here, and then the corrective move back up into this area here. So this is the, we'll look at the Nasdaq in a moment, but we've been looking at Amazon, so we'll look at Amazon here as well. So as you know, to me it appears that we've got 5 waves up here. I haven't really been able to get really good clarification on this particular structure here. I can see that this is wave 4 here. I can see that this is a wave 3 here. I'm just a little bit concerned about this space here, but I think that I'm on the right track because this has moved down nice and sharp here. So we can look at that being the A wave here. It probably come down a bit further if the S&P's got to come down, and then the B wave here and the C wave down to this area through here. So I think we're on, generally speaking, we're on the right track. So taking that on board and looking at the Nasdaq here. So I've got this 1 degree higher here, but look, 1 and 2 and 3 and 4 and 5. When I go to the hourly chart, I'll have this at 1 degree smaller. But the good thing about this here, in terms of getting a long trade here, if we're correct here and we've got 1, 2, 3, 4, 5 down to here, so an A wave and a B wave and a C wave down here, then we've got this large number here, the 65 number, 6,500, halfway between 5,000 and 800, halfway between 5 and 8. That was the same number, the 2650 really we were looking at with the S&P. Bit of a long story, but they're important numbers, not obvious numbers, but they just work. End of story. In stocks as well, we'd look at that at $16, well, 65 cents, $6.50, $16.50, yeah, so on. So, yeah, what I was saying here, the good point about this is that if we do get this correction here, then we can use this number to get a really nice, safer long trade on here, because having support on here would be is just perfect. Like having something like that here, the arrival, the reaction, the first high above the level, an ABC correction, and then coming down in this way and looking to add, basically building, you know, strongly off this level here. That's what we'll be looking for if we're right. Okay, so let's just get through these guys. Sure, we can do a little short trade through this little section here. So on the hourly chart here. As I mentioned, I've got these 1 degree smaller, so I've got this as blue wave 1 here. On the other one we had it as orange wave 1. And it's not like it's a big deal, but here we've got really nice 5 waves up here in terms of wave 1 here, ABC for wave 2, the 3rd wave, the 4th wave, and the 5th wave here. So we're looking for this to move back in this fashion here. So this particular move here is not, this move down here is not completed yet. If you are short, then you can leave the stop at this particular high here. But I haven't put a short trade in here for this. I'm short in the S&P myself, but you know, it's hard with when you go really right into intraday and, you know, trying to run a business at the same time and do a few things. And I don't normally trade. Much prefer to trade stocks with leverage than indices. But yeah, when an opportunity presents itself, it's when you're sitting there, well, you know, press the button, so to speak. But yeah, so this B wave here, that should be when that pulls back up. If we get 5 waves here, then after a correction, we're going to get another 5 here. So we can short this side of it if you want, but if you're short already, then leave the stop out of the way and look to take profit here, and then we'll be able to look at where the 50-60% retracement. Let's just imagine for a moment that we come down here. You can adjust that further in your own space there. So we'll be looking for this move here, but we need to get 5 waves here. We can turn this box here green. Let's just delete that. We can turn this box here green to short anywhere within this box here, but to do that, we need to be sure that we have 5 waves down here, and it does look like we're having 5 waves because we can look at just hijack these for a moment. So from wave 2 to wave 3 here, we've got 1 and 2 and 3 and 4 and 5 to play out here. For 3, anyway, for 5 to play out here, then we'll have an ABC pattern here, and hopefully we can get that in terms of a nice ABC pattern here, so we can sort of just draw a line through there. That sort of helps as well. We'll be able to work these levels over here, and we'll look at that a bit more closely when we're in that space in the next session. So alrighty, that's it. Thanks for tuning in, much appreciated. Cheers.